Picture this. A company sitting on a mountain of money, bigger than the entire GDP of most countries. That's BlackRock. And they're managing trillions of dollars. We're doing a deep dive into them today. You want to know if they are really pulling the strings of the global economy or just along for the ride? And frankly, after reading through these sources, I'm wondering the same thing.
It's a fascinating question, and to get to the bottom of it, we need to start with the basics. What does BlackRock actually do?
Right, because they aren't exactly a household name. It's not like we see BlackRock sneakers or drink BlackRock cola.
Exactly. BlackRock is an asset manager, which means they invest money on behalf of their clients. Think pension funds, insurance companies, even sovereign wealth funds. They manage money for the institutions that manage your money.
Okay, so they're like the ultimate middleman in the world of finance. But what makes them so much bigger and more influential than everyone else?
A few things. First, they rode the wave of a financial innovation index funds. Remember, they manage trillions of dollars. Instead of trying to pick individual winning stocks, which is very difficult to do consistently, they build massive funds that track entire market indices like the S&P 500.
So kind of like diversifying your portfolio to the extreme, spreading your bets across hundreds of companies at once.
Precisely. This passive investing strategy has exploded in popularity because it's generally considered a safer, more stable way to grow wealth over the long term. And BlackRock is the undisputed king of this arena.
And I'm guessing those management fees, even if these seem small individually, add up pretty quickly when you're dealing with trillions of dollars.
You're catching on. Those fees are the lifeblood of BlackRock's business model. And this is where it gets really interesting because their profits aren't directly tied to how well your investments perform, but rather to how much money they manage overall.
So there's a built-in incentive for them to just keep growing bigger and bigger. And your pension fund, your 401k, that's all part of this massive pool of money they're playing with.
It is. Your retirement savings, even if you've never heard of BlackRock, are likely contributing to their bottom line. And that raises some critical questions about their motivations and priorities. Do they prioritize the financial well-being of individual investors like you, or are they more focused on growing their own assets under management? That's what we'll delve into next.
So they're managing trillions, including a piece of our listener savings. And their profits are tied to how much money they manage, not necessarily how well those investments perform. That sounds like a recipe for some potentially risky behavior, doesn't it?
It's a system that certainly warrants a closer look. And to understand the potential risks, we need to talk about a concept called universal ownership.
Okay, let's unpack that. What is universal ownership and why should we care?
In simplest terms, universal ownership means that BlackRock, through their vast network of index funds and other investments, owns a small piece of almost every major company on the planet. We're talking Apple, Amazon, ExxonMobil, you name it. BlackRock likely has a stake.
Yeah, I remember reading in one of these sources that BlackRock actually owns a larger percentage of Amazon than Jeff Bezos does. That's wild. How does that even happen?
It's a testament to the sheer scale of their holdings. Think of it like this. Instead of putting all their eggs in one basket, they've spread their bets across thousands of baskets. And while those individual stakes might seem small, maybe a few percentage points here and there, they add up.
So even a tiny sliver of ownership in a company as massive as Amazon translates to a significant chunk of change and influence.
Exactly. And when you add up those tiny slivers across thousands of companies, you start to grasp the true scope of BlackRock's influence. Those holdings give them significant voting power in the corporate world. Remember how we talked about your pension fund being part of their portfolio? Well, when BlackRock votes on corporate matters, they're technically doing it with your money, even though you probably didn't have a say in the matter.
That's a bit unsettling, isn't it? It's like our retirement savings are being used to wield influence in ways we may not even agree with.
It's a valid concern. And it challenges the traditional idea of shareholder democracy, where individual investors have a say in how companies are run. With this level of concentrated power in the hands of a few massive asset managers, we're seeing a shift toward what some call a shareholder oligarchy.
Oligarchy, that's a fancy word for rule by a powerful few. How does this shareholder oligarchy actually play out in the real world? What are the practical consequences?
That's the million-dollar question. One concern is that it can create conflicts of interest. For example, if BlackRock owns a piece of every major company in a given sector, does that diminish their incentive to push for things like higher wages or more competition, which could potentially eat into their overall profits?
So instead of advocating for policies that benefit workers or consumers, they might prioritize maintaining the status quo because it benefits their bottom line across their entire portfolio.
It's a complex issue with no easy answers, and this influence isn't limited to the corporate world. BlackRock's reach extends into the very halls of government.
Our sources describe a sort of revolving door between BlackRock and powerful institutions like the U.S. Treasury, the Federal Reserve, even international organizations like the World Bank.
Yeah.
What's going on here? Is this just standard networking in the world of finance, or is something more interesting going on?
There's always a degree of interconnectedness between the financial world and government, but the sheer number of people moving between BlackRock and these institutions raises some eyebrows.
It does make you wonder if those cozy relationships might translate into favorable policies for BlackRock, even if those policies aren't in the best interest of the average person. It's almost like they've got their foot in the door everywhere, and they're not afraid to use it.
Right.
We even read about their lobbying efforts after that whole 2008 financial crisis, right?
Yeah, there was a big push for stricter regulations on those financial institutions deemed too big to fail after the crisis, right? BlackRock, despite managing trillions, successfully lobbied to avoid that same level of scrutiny.
So even though they were managing these huge sums of money that arguably, played a role in the crisis itself, they managed to escape stricter oversight.
Yeah.
That's kind of incredible.
Yeah, it really raises questions about their influence. And remember that whole passive investing thing we talked about?
Yeah.
It turns out BlackRock basically gets to self-regulate when it comes to classifying their own investment activities.
Wait, hold on. I thought we were saying this was passive.
Right.
How are they self-regulated?
Exactly.
Isn't that a conflict of interest?
It's a major point of contention.
Okay.
BlackRock submits these reports every year, assuring regulators that everything's above board, but there's no one really checking up on them.
So they're grading their own homework.
Essentially, yeah. And that raises serious concerns about transparency and accountability.
Okay, so let's recap here.
Yeah.
BlackRock manages trillions of dollars, including, by the way, probably a chunk of your money if you're listening to this.
Right.
They might be influencing prices. They profit off stagnant wages. They've got these close ties to governments. And they basically get to grade their own homework when it comes to regulations.
Yeah.
Is there any hope for change in this system?
Well, there are glimmers of hope.
Okay.
Some of the sources mentioned efforts to increase regulatory oversight of these massive asset managers, especially regarding their influence over banks. But like we said, these are financial giants. They've got a lot of lobbying power.
It's a real David and Goliath situation here.
It is.
But you know what they say? Even David needs a good slingshot.
That's right.
What can people listening to this even do? Where do we even begin to tackle something this big?
I think awareness is the first step, right?
Yeah.
Understanding these financial systems and how they work and the potential consequences of concentrated power is crucial. From there, it's about supporting organizations that are pushing for greater financial transparency, accountability, and of course, making informed choices with your own investments, however small, can make a difference.
So to wrap up our deep dive on BlackRock, one thing's for sure. Their influence is massive. It touches almost every corner of the global economy, whether they're actively trying to, quote-unquote, control the world, like some of these conspiracy theories suggest.
Right.
It's debatable.
It is, yeah.
But what's undeniable is that their practices raise some serious questions.
Yeah.
About corporate power, about ethical investing, even about the future of our financial system as we know it.
Absolutely.
So as you go about your day-to-day, ask yourself, is BlackRock pulling strings in the background? And if so, what does that mean for you?
It's a question worth considering.